What's going on, ladies and gentlemen? Camilo here. Welcome back. Happy Monday. I hope you all had a great Christmas weekend. So, markets opened up really well today, all of them meeting our upside objectives. Okay, so we have the SPY, the Qs, SMH, IWM, and the Dow all closing in the green territory, with the SMH leading the pack. Okay, guys, so in this video, we're going to review, like we always do, two wave counts for the SPY, the bullish count and the bearish count. Why am I reviewing the bullish count? Sorry, the bearish count, because that is still at play. There's a very small percentage that it'll happen, but nevertheless, those levels need to be broken for us to consider that we will put that on the burner or on the shelf and never visit it again, because all we want is for the markets to continue to the upside. Okay, now before we dive into the analysis, consider subscribing to the channel, give me a thumbs up, and hit that bell icon so you'll be notified when I upload these videos. Also, if you stick around, I'm going to review two stocks that are in favor for my watch list. Okay, the watch list that I share with my team every single day, and I'll share the wave count, the analysis, and what the targets that I am looking for should those levels be triggered for us to take trade opportunities to the upside. Okay, so the SPY here, I'm going to turn the labels for our bearish count, and this bearish count is suggesting that out of the November 22nd high, we made our first A wave down, 3 waves up for the A wave, 3 waves down for the B wave, and now we made our 5 waves to the upside for the C wave of the B wave. Now, this 1272 of this high degree and the smaller degree are two of the resistance zones that I am looking for the potential rollover into the market. So in this bearish count, should the price action continue on higher, okay, we should be able to see a rollover around this zone. Okay, so around the 482 to the $480 region on the SPY. Now, if we actually hit this resistance, and the key to know if this is going to be the wave count is if we start seeing a pullback aggressively to the downside. All right, if we see some of the levels that I'm going to review on the bullish count be broken, okay, because if those levels are broken on the counter trend of this decline, then it is likely that this is the count. Now, obviously, if when this rolls over, if we start going lower and lower, and we break this low, the low of December the 20th and the low of December the 3rd, then obviously this is the count. So the downside targets for this should be the following. So if we take an extension tool, okay, from the high of the wave A to the low wave A, all the way up to the 1272, then we turn on our 100 or the equality, right, which is another 1272, and our downside target should be the 448. So that'll technically be down towards a little bit below the December 3rd lows. All right. Alternatively, we can go down all the way towards the 1618. Okay. And that is still valid. So the 1618 will bring us down towards the 440, which will be support down over here towards the high of the wave 1 and the B wave of this wave 2. Okay. So our upside targets should be 482, 480, and then our downside targets should be 448, 440, should this play out. However, let's go to the good news. All right, the good news is that in the SPY, for our bullish count, if we go to the 1 hour time frame, our upside targets should be the third wave at 100% extension, which is 500. Now, it is likely that we see that towards the end of January, middle of February, or the beginning of the months, but down here, let's take a quick look at what our game plan should be. So let's dive down to the 15-minute time frame. All right, actually, yeah, 15-minute time frame should be fine. So out of the November the 22nd high, right, we made our W wave, we made our X wave, and then we made our final Y wave to the wave 2, which came in at the, just shy of the 50% retracement of this advance, right, of this wave 1. So wave 2 at 50% is spot on. I really like that. So out of the November 20th low, right, we rallied up into the 5 waves. Now, we should be able to see a little bit push higher, but this is where I want you guys to focus. All right, if we see a 3-wave pullback like this, let's say the ABC pullback, right here, right, into support zone at the 23.6 and 38.2, so 470, 466, right, which falls in line with this price action, this cluster of price action here. Okay, this level should hold support. Now, where this sort of compares or falls in line with our bearish count is if in the bearish count, let's open them up side by side, all right, down to both the 15-minute time frame, so they could be side by side here. All right, so both of them should start rolling over. All right, we should see price action start retracing in both counts. Now over here we want to see 466 hold at the very least. Over here we want to see those levels hold the same. However, if we start seeing price action breaking that area, okay, and then bounces and then just heads lower and breaks that low, then this is the count. However, if the case is that we see price action bounce from here, okay, and then come down, and then we rip to the upside, taking out these highs, then this is the wave count. All right, so we're very close. So once we see price action in the SPY hit the zone, I will try to take a trade opportunity on the indice, so that, or on the ETF rather, to see if we could take some profits to take us to new all-time highs on this wave 3. So I am looking forward to this wave 3. I am really excited for that to unfold. I know that if we start rolling over, then my stop will be right below the C wave. Okay, guys, so I hope that's clear. If you're not clear with this game plan, leave a comment down in the comment section. I'd love to interact and explain to it for you if you are in doubt. Okay, it's pretty clear at the moment, but let's see if you have any questions. So let's take a quick look at the Qs. All right, the Qs. This is the bearish count on the Qs. But let's dive into the bullish count, which is what I'm going to review with you guys. All right, so on the Qs, right, we haven't made a new all-time high just yet. You notice that the SPY did, but the Qs have not. So out of the November 22nd high, WXY to the W wave, X wave, WXY to the Y wave of wave 2. Now wave 2 came into the 50% retracement support. It held it. What threw us off here, guys, was that actually the Qs did break the low of December the 3rd. Okay, so that's why we weren't really quick to take a trade here, because of this little detail that a lot of people, I guess, did not catch. Right, we did break this low, and sometimes or oftentimes when we break lows of this pivot point here, or this change in trend, it's likely that the continuation lower is at play. However, we found support at the 50% retracement at 378, and then we were met with the upside opportunities. Okay, so what are our targets to the downside for a retracement, and what are our levels of support? So we have this trend line here that we broke above it, that was originated on November the 22nd. It was confirmed on December the 8th, confirmed on the 16th, and then we broke above it. Actually, we rejected it ever so slightly. We pulled back a little bit. All right, let me zoom in here so you guys can see. Okay, so again, originated on the 22nd, confirmed on the 9th or the 10th, so on the 8th, rejected on the 15th, rejected on the 22nd, but then we broke above it on the 23rd. All right, so the game plan is that if we start seeing higher price action, fine, let it be, but we want to see a 3-wave pullback. Okay, if price action keeps on going higher, then we will start trailing this. Actually, I haven't updated this, my bad, guys. We will start trailing this, our Fibonacci levels, our pullback, the 23 and the 38.2, to the highs, because what we want to do is that we want to see a 3-wave pullback to this level. All right, we want to see our A wave, our B wave, and then our C wave to this wave 2. All right, so this will be a good zone. Maybe what we're going to do is that the Qs will make a deeper correction in the SPY, and we're going to retest this trend line. That is likely to happen. So I do caution you to be patient with this, because I don't want you guys to get scared, right, or get shaken out of your positions. The lower you go to the zone of the 38.2, the better your chances are for a risk management trade and not be shaken out of your position, right? Because you could put your stop right at the break of this trend line or below our next level, which is the 50% retracement, which, as you can see, it crosses with the trend line. But we're not going to take that just yet. We're going to see this pullback play out throughout this week, hopefully, so that by next week, into the new year already, we see this 3rd wave. All right, so that is that game plan. SMH, ladies and gentlemen. So let's take a look for the bullish candle, the SMH. Is this the SMH bullish candle? Right over here, guys. So SMH. So out of the November 19th high, or 22nd rather, right? ABC to the W wave, X wave, ABC to the Y wave, or wave 4. Now this Y wave came in at the 100% extension, right? Spot on extension or equality of wave W and wave Y. So that's a pretty good indication that this correction ran its course. Okay, now we are ripping up higher, and we took out the X wave high. So I love that, because obviously the X wave is not here. We cannot continue counting three ways. Or maybe if it becomes a really complex double zigzag corrective, whatever that, right? Maybe, I don't know. We yet to find out. And how do we find that out? Is when we start pulling back towards the zone, to see if the 310, 305 holds as support. So again, just like in the SPY and in the Qs, this is the same game plan. So what we have here is that 1, 2, 3, 4, and then the final fifth. Let me label this so it is clear for us. 1, 2, 3, 4, and 5. Now, where is this fifth wave going to terminate? So two ways we can find that out, right? So we take an extension from the wave 1 to the wave 4, all right, and we're going to turn on a 100% extension of that those two wave counts. Okay, so 318.85, we may see a little bit of a push to the zone in the fifth wave, or alternatively we can take an extension from the wave 2 to the 3, measure down to the 4. And I like to, be conservative and do the 618. So you see that these two zones are in conference with one another. So this will be serving as a good level of resistance coming into this week for the SMH. Then we see our upside opportunity here. Then 1, 2, and 3 down to support, and then we get the rip for the third wave. All right. So IWM is in the same boat. I like IWM actually, how it's playing out so far. And here we can see that actually, let me go up to the 1 hour time frame. So in actually, no, this is not the count that I want to look at. This one here. Yeah, here we go. So IWM, or small caps, right? Out of the B wave corrective pullback here, we got 1, 2, 3, 4 to the 50% retracement of wave 2 to the wave 3, spot on. And then we got our sort of not so directional but meandering final fifth of wave C that came into the 618% retracement support. Okay, we are now getting this rip up higher, and the way I'm looking at this, guys, is the same way I am envisioning the rest of the indices. So we can count 5 waves here, right? We may see a little bit of a push on higher. Then we're going to try to see if we can roll over to our next support zones, which should be, let me clean this up here. Which should be the 220, 228. So let me do this. So we got our 5 waves up, right? 3 waves down for support, and then we head on higher. Should IWN continue on lower and we take out these lows, all right, then obviously this wave count is still at play, but I don't think so. I think that we will start seeing a push further up into IWM, okay, and small caps. All right, guys. So the last two stocks that I want to share with you guys are Microsoft and Nvidia. So let me turn on this real quick for us here. And Microsoft is setting up really good, guys. I really do love this setup here. So we are going to see further price action towards the $344 region in the wave 1, at which point I want to see that third wave, or that 3-wave pullback down towards the 23 to the 38.2% retracement at 338 and 334. Should we get the zone, man, it's going to rip on higher to new all-time highs. Okay, and we're going to see the third wave of a third, which is pretty powerful in my opinion. All right, Nvidia, same deal. We want to see Nvidia continue on higher ever so slightly. We want to then, I think I have this chart here. Actually, no, it's in this one. My apologies. So Nvidia, we have our third wave. We have A, B, and C down to the 38 to the 50% retracement support. All right, we may see 1, 2, 3, 4, and our final fifth. Let's actually down to the 15-minute time frame, and let's see if we can decipher this to see where our fifth wave of wave 1 could finish. All right, so let's start labeling. So 1, 2, 3, 4, 5. Right, we're gonna promote this or demote this to a lower wave count, and we're gonna take our fib extension. So like we did on the SMH, right? We take it from the 1 to the 4, and we're gonna do 100% extension. So it is likely that we may see Nvidia roll over ever so slightly, but then we take the wave 2 to the 3 to the 4, and we take our 618, and yeah, there we go. So likely that 313, 312 in Nvidia, and then we see this pullback towards the zone. Let's take a quick look. All right, to the 23 to 38.2. So 302, 296 should be our next level of support for Nvidia. Okay, so we got our 5 waves, 3 waves down, and then the rip. So in Nvidia, we want to see 302 and 296, and in Microsoft, we want to see 338 and 334 for our support levels here. All right, guys. So I know it's a little bit of a long video, but I wanted to show you guys these 2 stocks that I have at play. So consider subscribing, give me a thumbs up, and join Trending Waves if you want more of this content. All right, guys. As always, thank you so much. I'll see you guys tomorrow.